Hello, Maverick traders. Welcome out to your market roundup for December 1st. Corey here with you. We're going to take you through meaningful news, what's moving markets, what sectors are heating up and cooling off, and where the best trade setups are right now.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
So today we came in from the weekend. It was kind of a holiday shortened week last week, and it was a little bit of a rough day. Dow down just shy of 1%, S&P Nasdaq about 0.5% down. Russell hit a little harder over 1. Oil bounced back sharply, and the energy sector was certainly an outperformer so far this week, which is only one day. Crypto meltdown continues. Manufacturing is down for 9 straight months. This was the design of tariffs, was to get manufacturing moving back to the U.S., but that certainly is not playing out thus far. And this crypto meltdown could filter into other assets. So sometimes when there's liquidation in one sector of the market, it can filter into other areas. Simply because of margin calls and things of that sort where people are forced to sell and raise liquidity. Advanced decline line, about 2/3 of stocks declining today, and the 50-period moving average slightly bearish with 56% of stocks below their 50 MA. So as we look at the chart of the S&P, we've rebounded back above the moving averages, a little more bullish than anything. Unfortunately, we're still within what I would call the longer-term trading range. So you have resistance up there. You've established support down here. Whoops, my drawing tool went a little wacky. Here's your support down here, your resistance up there, and we're basically within that range. Now, we may frankly go up and retest that high. Whether or not this turns into a double top pattern and then we melt down, or what most of the time happens instead is not a double top. Instead, most of the time you'll at least respond to this resistance and then initially fail and then go up and through, what they call a cup and handle type of pattern. But ultimately, a retest of those highs seems likely. Seems like we're headed towards the top end of the range. Now, as we look at the equal weight S&P, this was important for the markets, that there was broad participation. If the S&P was just zooming higher solely because some influx of capital into Apple and Nvidia and the biggest market cap stocks, I'd be a little more concerned, but this is key. We have other sectors participating. We have things like energy doing well, financials bouncing back. The healthcare sector remains strong, so it's not just tech. In fact, if anything, tech is kind of lagging right now as opposed to leading, which you want to see that broad participation. So as we look at today, it was an ugly day for industrials. Really, really ugly day. Bright red. Utilities had it rough. Little bit more weakness in healthcare. Everything else kind of a mixed bag. Energy was clearly the outperformer. Very green in the energy space, and that makes sense on a day where oil was up sharply. Let's look at some possible bulls and some bears, and to nobody's surprise, when a bull pops up in my scan that's in the leading sector in energy, it's going to be one that we highlight. So here's Devon Energy, and this is in the healthcare space. Big producer of oil, nat gas. You can see the breakout. You can see a little mini cup and handle, right? Here's your cup, there's your handle pattern, and the upside breakout. Devon looks like an opportunity to buy on consolidations or pullbacks. We want to continue to remain looking for bullish opportunities in something like that. Coles just broke out. This one was news driven. Obviously, huge acceleration on big volume. What I would love to see here is just a few days in a high base. If it does that, then there's more upside. You have to think of it in terms of the psychology. If this thing's up that much and they're not even able to knock it down a point or two, not even able to retrace back some of this, think about how strong it is. If you have a stock that was trading at 15 and change, zips up to 24, and the sellers still won't come in and give any ground, it tells you not only are they unwilling to sell, there's more buying interest here. So I'd love to see a tight consolidation and play it for a little more upside. It's not going to be as robust as this recent rally, but a move up towards 27 from 24, 28 per share from 24, certainly possible. On the bearish side, we've got Palantir. Touched on this one in the weekend trading room. You have breakdown of support. You can see the number of retests against that level. And here we have a plunging asset that has bounced, right? So this is the bounce up. And what I'm anticipating is a lower swing high and subsequent decline that either tests that low or makes a new low. Either way, a move from 168 down towards 148 again is plenty of meat on the bone for a bearish trade. So Palantir, a possible downside target. And then MSTR. This one's been in the news. They're a huge holder of Bitcoin. I'm just deeply concerned. I mentioned this to our FX division for the past month or two that I thought crypto, when Bitcoin was at 110,000, I thought we were starting to see the sell-off, and I said, look, I think it's going to go to 90,000, which probably sounded absurd at the time. Well, we're at 85,000 now, so I wasn't even bearish enough. I think there's a lot of selling pressure. There could be forced liquidations and things like that. So this could just have a little more downside. I'd play it conservatively, little spreads. Make sure you get good execution. Sometimes when volatility's super high, the bid-ask spreads can be too wide, and your price that you're getting in at, there can be too much slippage, too much of a problem to split bid-ask spreads and get a decent price fill. If that's the case, we'll just throw this one out. But it's one I'm going to look at a little bit tomorrow for more trading opportunities. I've traded that off and on. I've traded Bitcoin itself the past month or two to trade to the downside, and I've mostly been trading Bitcoin itself on the downside, but there's opportunity with other assets that are Bitcoin related. We're back inside of the trading range, but certainly a little more bullish in markets. Further liquidations in crypto could stress out other markets. So be aware, if things get really, really bad in crypto, you'll probably see other assets decline in sympathy and force liquidations and things filter through. Friday, we got PCE, an important inflation gauge. The bulls want to see more Fed rate cuts. We need inflation to be under control. You've got BHP and CrowdStrike, Salesforce, Dollar Tree, Snowflake, and others reporting earnings today, or this week rather. Hope you've enjoyed the market roundup. Have a great week, everyone, and we will see you next time.